It is currently November 13th, about to be midnight. Just made $600 trading in the PM session. Now, typically, I would not trade in the PM session just because that there's less market volatility, market structure, and there's slim to nothing when it comes to buyers and sellers being in the market. Now, as we see these bunch of like doji candlesticks get created, and that's just an indication that there's not enough buyers and sellers in the market to be able to create these full lengthy candlesticks. Now, the reason why we see like lengthy candlesticks right here and it's consistent is because that there is a new session that is starting and people are waiting on that session time to actually begin and actually take the trade, which is why we see that. But also keep in mind that we're also in a smaller time frame. But as you've noticed, we decided to trade on ES instead of Nasdaq, which Nasdaq is mainly a future I would trade with instead of ES, just because Nasdaq has market volatility is way much better and it's more aggressive and there's a lot more money to be made. But again, risk management is a big factor when it comes to trading, so keep in mind that. And that was also in my mind. So I wanted to trade on ES, and I was also tired, but the reason why I decided to take a trade on the PM session was because I got way too ahead of myself, and it's actually against my rule. But I'm not gonna be trading in the PM session, hopefully for like a while or never. But let's get into this trade, right? So I got into the market like 950. Yeah, we got into the market at 950, right? And we see this roaring upside. We see this roaring upside completely just taking care of this completely just taking care of this previous high, right? But before we even saw that upside, right? We got this liquidity get taken out. Sell side liquidity gets taken out. Market decides to rally up higher, and I was pretty surprised that market would have came up right here, just because I thought that we would have wanted to just continue to keep on chopping and chopping down. Look how choppy this gets. Goes up and down, goes up and down, just like a downtrend or equivalent to an uptrend. But sell side liquidity gets taken out, buy side liquidity gets taken out, right? And I honestly thought that we were going to take care of this previous buy side liquidity, but no, market went into the other direction, decided to do a 180. So going with that, we did take care of this one previous high. And what's our next strategy? Our strategy is to find liquidity sweep, which we can check mark, and we got to find breaker structure. Now let's find breaker structure. When did breaker structure happen? Right here. Boom. Right, breaker structure right there. But that is still not enough for me. Again, it's better to have extra confirmation, right? Boom, right here. Extra confirmation that market shifted. Now, what do we take away with that? Now, we're looking for an entry. What do we see? Oh, we're on the 2 minute, right? We see a 2 minute fair value gap get formed, right? And we see price go down and goes up and revisits that fair value gap, completely respects it. We wick through it, right? But we close below it, which completely respected the fair value gap. But again, that was not my only confluence. What do we also have? We also have equilibrium coming into play, right? We want to get in an entry where price is discounted, not in premium, because again, it would be you'd be better off buying a bag of Doritos that are $2 instead of $5, right? But we got equilibrium. We entered when price was discounted, and that was also not our confluence. We had more confluences as well. Breaker blocks. I love breaker blocks and the order blocks, right? So we got three confluences. We got a fair value gap, breaker block, and equilibrium, right? And our bias was that price is bearish, right? So again, price rips through that breaker block, revisits the fair value gap and breaker block, and continues on downward. Now, where did I actually place an entry? Literally the tippy top of that fair value gap, right? So we're gonna put this in perspective right here. Where would my stop loss be at? Right there, right? So your first TP would have been right here, right? If you wanted just to play small, you could have played right there, right? Your second TP would have been right there. Your third TP would have been right here, and I decided to go with the third TP. Now, the reason why I decided to go through the third TP instead of the first one or the second one was, again, if we decide to blow through this second TP but not reach this third TP, I would have put my stop loss right here, just breaking even, right? Again, just because market shifts to the upside doesn't mean that we're gonna completely, blow straight through on up, right? Market does not work like that unless market has a reason to. But we decided to go the third TP, and that was our target. So if we actually go on replay mode, I did take a 3 contract trade, right? Right there, right? And we put our TP right there, put our sell side right there. Yeah, we put our sell side right there. Not just sell side. I'm sorry, stop loss. Again, it's the middle of the night, so I'm not all there, right? So we see market continues to go downward, 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 downward. And yeah, that's how I made $600 right here. As you can see, $600 profit made. But again, don't trade into the PM session. I'd rather you trade in the AM session unless you have a better reason not to trade in the AM session and actually trade in the PM session. But again, hopefully hopefully I won't be trading in the PM sessions for a while, or not soon, because actually this goes against my rule. But again, we made the best out of it. We made $600. We used 3 confluences. Again, let's go over it. Breaker block, fair value gap, and equilibrium. We also have breaker structure and liquidity sweep. My bias was bullish, and it played through wonderfully. We played with the house, not against the house. You're better off playing with the house against the house. Because imagine if we would have went long right here, right? Let's say like oh, I didn't even notice that fair value gap right here. We got a fair value gap right here. It gets respected, right? And let's say if we wanted to go long, let's just put it underneath here. Let's say, oh, I think, yeah, you know what? I feel like market's gonna. Oh, oops. I think market's gonna go up here, all right? And actually, let's go into replay mode. Let's actually see this in action. Let's say that your fair value gap was the only confluence that you had. Oops. Let's actually, yeah, let's take a buy right here, right? And let's put our stop loss right there, and let's put our TP right here, right? Right, it's like, oh, we got this, fair value gap that didn't get touched on the 2 minute, right? Oh, market goes straight up. Okay, that could be a strong indication that market's gonna, do a 180 and just reverse on upwards. Psych. Market just goes down, and then you get stop out. You need more confluences, because the more confluence you have, the better the probability of the trade going in your way. Again, you don't want to play against the house, right? You want to play with the house. If the market's going bearish, you go bearish as well. If the market goes long, you go long as well, or you go bullish, right? It's not hard. not hard. You just got to be smart, use logical information. Don't let your don't let your emotions speak for you when you're trading. Again, this is money. This is your money. If you're trading with a demo account, if you're trading with, a funded account, if you're trading with your own money, again, this is money. This is money that can be made, but it also can be taken away very, very, very fast. So please, again, educate yourself. Don't let your emotions speak out for you. Use the information that you've learned. Again, I've talked about this in my previous video called Mistakes Are Your Leverage or something like that. That you got your resources, you got the internet, such as YouTube, you have books which you can go to the library and study, and make sure you take notes, because you want to ingrain every information that you learn from reading and from watching those YouTube videos and watching mentors. You want to revisit those notes and actually get ingrain that information in your head so you can use it in live market in the live market. Now, preferably, moving on subjects. I know we're getting way out of topic and making this video longer, but again, the, I just kind of just want to speak and actually just give my advice. Even though I'm still a rookie, I'm still a beginner, and I know my opinions will change, in the future. But preferably, this is my opinion. It's better if you trade it on a demo account rather than going on replay mode, because you don't really see you don't really see the process of a candlestick get made. So let's take like this candlestick, right? Let's take this candlestick. So what do we see with this candlestick is that it's bearish, right? That's the finalized that's the finalized candlestick, that it went bearish, right? But price um price decided to go up, but then prices started to move down. Every candlestick plays a story, right? You just got to learn how to use that information. Again, educate yourself. Don't speak out. Don't speak out in emotions. I rather you trade with live market, so you get that experience, and then you also get that psychology going and get practice, right? Because again, you don't want your emotions to speak out. You don't want to get too greedy. Also, you don't want to be too afraid. Be a walking poker face. If you lose, you lose. If you win, you win. Don't get too excited. Don't be too depressed. Just be smart and just be better every day. Take it one step at a time. Don't take a huge step, because that was my mistake. That's been my mistake that I've been doing for a while. So yeah. So that's how I made $600. Have a good day. Have a good night, you guys.